from unfortunate winning trades.
The reasoning why I took this trade, this is a ass cheat. This is literally ass.
To regrettable exits.
I didn't catch none of this. All of this is all I caught. I just caught that.
These are times when traders exit too early and regret it. Alex is on the way from $100 to $1 million, and things are looking good for him.
Left head, right shoulder, retest of the neckline. Exactly what I explained yesterday on the 1 hour time frame. Higher high, higher low, higher high, blah, 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 blah. Once it breaks and retests this neckline, we will be interested in selling. And boys, that is exactly what we did. We broke and we retested once again. Like, does not get any more legit than this.
Carrying on with his streak, he gets another win 2 weeks later. But he's not happy, even though the weekly goal has been achieved.
Our shipment is actually getting ready. So before that, I am actually just a little bit annoyed, simply because I knew this was going to happen. We analyzed this and I said it a gazillion times, a billion times. All you had to do was set and forget, which is this trade right here. This trade absolutely violated my take profit. We closed here for a 1 to 3 for 70 pips.
The price smashed right through his closing. It could have been a fortune if he had predicted the drop.
If I would have continued to hold this position to the point we are now, we'd get a 1 to 7 for 144 pips. This account right now, instead of being at 200,000, we would easily be over $500,000 with one trade from 40K.
That's gotta hurt, but he was not done.
Could have tripled the account. I could have closed the account at $500,000 by doing nothing. And you know, this did mess with my psychology a little bit, but I'm leading by example. I have too many people watching me. I have to be realistic and be like, you know what, guys, this is going to happen. You're gonna set and forget, and you're gonna close at the point where you thought it was the final point before price reversed.
And although Alex was still happy with his profit because the trade was well executed, TJR could not share the same emotion. He is trading the S&P 500 in this trade, and like the rest of his trades that day, this one would take a bad turn too.
As you can see, I'm an idiot. But anyways, we entered here, stops above these highs, we push up here, and then when I see that leg up after we had freaking barely missed these hourly lows, I was pretty much kicking myself, saying, why the f would I have even entered into a trade here? And that is exactly what all of you guys should be saying.
He is roasting his entry, but in the end, he still somehow makes some profit on this trade, which isn't exactly a happy moment though.
But somehow, some way, take profit 1 gets hit without me getting stopped out. And then, unfortunately, I mean, this was honestly just karma for how ass of a trade this was. Look at what happens, bro. Literally on the dot, I get stopped out at break even.
Not only does he get stopped at break even, the price continues to fall down into the dumps.
And then price continues down to hit take profit. If take profit 2 got hit, I probably still would have ended up for a loss on the day because I de-risked on this trade, and take profit 1 was really ass.
Take profit 1 indeed is shaky. It's a 0.97 risk to reward ratio, not even 1-to-1, which is still pretty bad. This is the same risk reward ratio that you can get in casino games like the roulette.
Not even a 1-to-1 risk reward ratio. I mean, as you guys saw, I only made 1.4K. So overall, the trades today were f***ing ass. Don't listen to what TJR has to say.
He admits that he forced this trade even though it wasn't optimal. This next trader is the complete opposite. Neo Yang is trading AUD/USD. He identifies a position in the market and it skyrockets.
So if I were to do a whole recap of the setup, is pretty simple. If you look at the daily, it's basically just Aussie dollar finding exhaustions around 0.6197, forming signs of rejection. Then we obviously have our key patterns we use in our trade club as price print a high low here at 0.6168. Price at the same time also printed another high low at between this 0.6213 to 0.62 low.
The price exhaustion he's talking about is the point where price struggles to move further in one direction. Here it is 0.6197. Then he identified a key point of reversal or rejection, and finally a pattern of higher lows indicating an upcoming increase in price. But despite this amazing setup, he would not be able to milk this opportunity completely.
So as price print high low, that's when I was looking for a potential entry. I really wanted to hold this further, but as I say, I've been not sleeping well for the past few days as I'm busy, really busy working, not just trading, running community, also other thing. And yeah, decided to close the trade at the previous high around 0.6287 and call it a day for $141,000.
He closed early and lost potential thousands, but he had a good reason for it.
So let's go into Aussie dollar chart. To be very honest with all of you, I closed the position mainly because I'm getting tired.
But what Neo did only once, Doyle did twice, and somehow regretted it less. Doyle has identified a position to enter and is putting together a setup for the trade. He starts with the zone.
Okay, now this is still a 5-minute demand, so I'm like, okay, how can I make my zone a little bit smaller, because I hate my 5-minute supply and demand zones to be super large. I love when they're smaller because I risk less, you know what I'm saying? Like when they're smaller, I risk less, or I get in aggressive if they're like super small. All I did was just do this. I'm like, boom, okay, let's just make it smaller because that gap still haven't got tapped into. Now this is the open right here, 9:30, that's the open. I'm not touching nothing until like 9:40, 9:45. That's literally it. I'm gonna let it do what it do, because at the end of the day, this could have very much got blasted through. And me personally, I really don't like trading at the open. So I'm like, let me just wait and see what it do. Is it gonna hold?
And then he finally receives his sign to jump in.
So fast forward, boom. Now this was a great candle, a down up candle. I'm like, okay, like they might want to hold on this. I send it to the group. I'm like, okay, like we're gonna buy, and as soon as it break that candle, we're gonna get in. So let me put the entry right there. That was my entry. I put my stop loss underneath that candle, and first target always 1-1. Boom, that candle did that. TP hit off rip, and I didn't even leave a runner, and this thing started going crazy. I'm not gonna lie, it started going absolutely
A
nuts.
steep rise in price, and through crazy odds, the same opportunity surfaced again.
You could have just waited until it came back down, and then you could have took that demand and go right back up. It was just so much money to be made on Thursday. It's ridiculous. Like if you didn't make no money on Thursday, bro, I don't know what you need, but you need something, because it was just too easy, bro. It was just too easy to make money on Thursday. No cap.
Unfortunately, Doyle did not take that second setup, losing a consecutive potential winner. And then he did the same thing in the very next trade.
Now, all USD, a little iffy about it because I just didn't like the structure of it. I knew it was a downtrend. I went to the 1 hour and I'm like, okay, let me look at structure. Again, I don't use trend lines. Y'all can have trend lines. I don't use them. But I'm just looking at structure. I'm like, okay, we keep breaking lows. Got low right there being broken, low right there being broken. Now, right here, the low haven't been broken yet. Okay, but we made a new low, but we haven't made a new high. So we still following structure, but we still haven't broke this low yet. This is on a 1 hour chart, so I'm just following structure. I'm not gonna think it's a buy until we break structure to the upside. I'm not guessing. I'm only looking at structure. That's literally it. I'm not gonna guess at all.
He notices a pattern, but is not confident enough in it to invest right away, until this happens.
So let's go back to the 5-minute, and we're literally just following structure. So right here, everybody in the group, like, bro, everybody in the group was looking at this all USD supply right here. And I'm like, this is looking really good. Like, and then the candles that was rejecting from it, it was just great. So I got in right here, and I actually had my stop loss above because I was just so iffy about it. I'm not gonna lie, like I didn't have it like above the candles. I had it a little bit above here, and all I really needed was just a 1-1. That was literally it. That was really, and of course it dropped more. And I could have took it, I could have held it to liquidity that was sitting down here. That would have been a good spot to get out. But I just didn't like the structure of it. Like I like clean structure being broken. Like yes, these are lows.
Of course, it dropped more is an understatement. That drop is more like a jump scare, and definitely on the more unfortunate end of unrealized loss. Another trader who is just as unfazed after exiting too early is TJR, and marks his take profits accordingly.
So obviously, we were stuck in some bullshit for a while. Okay, I entered on this. We come down. I'm like, okay, bet we're gonna hit take profit. Psych. One more push up. Okay, bet we're gonna hit take profit. Psych. One more push up. Okay, bet we're gonna hit take profit. Psych. We are going to drag our nuts on your face because NFP comes out tomorrow, and we don't want to move. That is my new take profit 1. My new take profit 2 was actually this. I just fully removed this hourly low from take profit 2. This was the full trade setup, a 1 to 3.2 risk to reward ratio. And finally, after this very last push up, taking out these 5-minute highs, we get priced to fully rotate on down and hit take profit 1.
After his first take profit has been hit, he's in a comparatively better position, but it's not over, as there is still take profit 2 that has to be hit.
Now, I will say, once price broke structure back to the upside on the 5-minute time frame, time frame, I ended up closing out the rest of my position, my second position, that I was going to close out at take profit 2.
And he closes the position there with a 1-to-2 risk to reward ratio, a far cry from his original goal of 1-to-3, but he's satisfied.
I did de-risk a bit, and I was still able to hit a really banger trade for around a 1-to-2 risk to reward ratio. The risk to reward ratio keeps going higher and higher along with my win rate. I've been absolutely crushing it in terms of trading this past month and literally this entire past year.
So although he missed the biggest win, it's still a win in his book. Even in this next trade, he has the same attitude. TJR is entering a trade with NASDAQ, explaining why he chose to undertake this trade in particular.
Solid candlesticks. From there, after we saw that 5-minute retrace and seen the 5-minute SMT, I was willing to scale down into the 1-minute time frame. We get a 1-minute break of structure right here at around 9:43, and then boom, plain and simple, we get a retrace into this breaker block. This is actually one of the few times that I've taken trades off of breaker blocks, but it worked out very well with this. Okay, we get a move down in the breaker block, we get bullish confirmation out of it, I enter, I put my stop loss underneath where my trade would be invalidated, which was underneath the breaker block.
So the 1-minute break of structure confirmed a bullish setup, and then price retraced into a breaker block. In the bullish context, this means that the resistance has failed to act as a resistance, supporting an increase in price.
We move around for a little bit. In reality, I probably shouldn't have set take profits right here. I just kind of saw like, hey, low resistance liquidity, low resistance liquidity, low resistance liquidity. Probably could have just rode it all the way out to these highs up here, but I guess you could say I got a little scared. Anyways, news, we had medium impact news that came out at 10, so we can see that this was a pretty volatile news candle. Almost got stopped out, didn't end up happening. And then following that, literally the very next candle, we hit first take profit, and then unfortunately on the next candlestick, I had moved my stop loss to break even, and we end up breaking even.
The price continues to climb at an amazing rate. If he had not stopped out at break even, he would have made way more than 2,000. Anyone would be mad at missing such an opportunity.
I even told the kick stream that I think that we were going to come up and still hit these highs, but I stuck to my freaking plan. We hit take profit 1. I moved the rest of my stop loss to break even, and in turn had a much smaller day than I could have, but there's no reason to cry over freaking profits that, you know, oh, shoulda, coulda, woulda, suck my dick, why don't you? Shoulda, coulda, woulda, bounced on that booty. Okay.
But TJR manages to take this one on the chin and continues unfazed. This next trade, however, is basically a free money grab for him. This trade comes after Donald Trump's elections and the markets have turned bullish. TJR puts to rest any thoughts of shorting and draws up a plan for entering long.
And my strategy, at least. So after making that 5-minute SMT, we were in a downtrend on the 1-minute time frame. We see a 1-minute break of structure on this candlestick right here. From there, I'm really just looking to enter, okay? So what could I be looking for? We have fair value gaps within here. Both of these get disrespected. And then we had this breaker block right here, which actually gets pushed into fully. And then we get a bullish candle out of that. I entered purely based off of that. Stop loss underneath the breaker block. And then again, kind of an unorthodox trade today.
He was searching for fair value gaps or price imbalances, but they didn't hold. Instead, price retraced back into a breaker block, which provided support.
I really shouldn't have had this second take profit. I really could have just left this one as my second take profit, but I don't know. I just wanted to secure more profits. My first take profit was off of this like 5-minute high. I know it wasn't a 5-minute high, and I know a lot of people are going to be like, there was no 5-minute retrace, but we did see 4 big down candles down. Like, that's the main thing.
This is how trading should work. There is no rule book that you follow 24/7. The market keeps on changing, and so should your strategies.
Anyways, we get buying orders out of that. I longed right here, stops underneath the breaker block. First take profit was set on these highs. Second take profit, I'd really just put it underneath this low was after this ended up sweeping out 4-hour structure, 4-hour high.
He doesn't place the third take profit on the previous high that swept liquidity because he doesn't know if it can generate enough liquidate to result in a break. He would be proven wrong.
Gives a decent retrace. This was actually perfect seek and destroy. We can see that we take this out, we get legs down perfectly on the break even. Remember, the seek and destroy pretty much comes down, stops the ideal AM session trade out at break even or a little bit lower, and then continues continues in the direction that it wants to go. And we see that this did that perfectly. And yeah, that goes over the trade that I took for the day.
The other traders who had placed at break even were stopped out earlier, but TJR could preserve his trade because he was prepared for the aggressive reversal, which happens frequently when price takes liquidity from a key level and then goes back to its original direction. Similarly, this next trader, Sniper Ads, showcased his resilience against market manipulation with this trade.
Is here. Now what I was looking at is, again, this is some sort of a double bottom, higher high. I was looking for a higher low to go higher high. Now, before the market had this massive bearish candle, there was a lot of rejection of this area here, and a lot of my students were asking, are we buying from here, basically? My answer to this was no, not really right now, because New York session is almost upon us, and this is where I'd expect a little bit of manipulation to occur. As you can see, I was pretty much bang on with that, because a massive 15-minute bearish engulfing candle printed and closed below all these lows over here.
Anticipating that market manipulation was an amazing touch. His plan is to wait for the market price to start increasing after that gradual decline. Let's see if he's right about the price though.
And that's what I anticipated again, because this was an area of manipulation, which I knew I could just tell, like, based off price action, you can see that the market was moving down slowly to the downside. So the last thing I expected was the market to just continue strong to the downside. If anything, if the market was moving slowly to the downside, I would expect an impulsive move to the upside. But what did it do before the impulsive move to the upside? It went ahead and took traders out to the downside, taking out these equal lows right here, stopping these traders out.
That one bearish candle, which resulted in the final drop, took out most of the traders who had put their stop losses against the previous lows. But it will only matter if he's able to capitalize on it.
It didn't enter here, but as you can see, after this 5-minute engulfing candle, well, just about engulfing, but a strong bullish candle, I saw that the market printed this variation right here, and that's where I went ahead and decided to enter. And this was about 10 minutes before New York opened. From this point, I decided to put my stop loss below this candle low, and as you can see, I targeted again this next level of support resistance.
He usually sticks to his rules, but this time he made an exception. The bullish engulfing candle was just too strong to ignore, so he jumped in on that one signal.
I wanted to see the market print me a simple high, higher low, higher high, higher low, higher high. Right, that was optional, but I think usually when it does this sort of move with, you know, momentum and volume, it can just do it in a couple of candles. So anyway, you can see right here the market broke above these highs, came back, and at this point here I was hoping that this would hold as a higher low, right, because it came back into drawdown. Right, as you can see, the market came down, I still held, and this is the important thing about my trading. You want to follow your plan and trust your plan and trust your trading system.
Indeed, there is no point in closing early if you're not sure why you're doing it.
There you can see the market decided to make that higher low, make that higher high, and as you can see, smash my take profit straight away. And this is in around 28 minutes, 30 minutes. Hit our take profit, made that 1, 2, 3 leg extension, and now what we would have expected at this point, which I was expecting, was somewhat of a higher low to form to then move the market to the upside. And if we just place that, I think this actually just happened. So there's this higher low. Look, as you can see, came right back into almost this area of support, which is previously resistance right here. And then as you can see, if we just let it play out, boom, smashed in that take profit even more and going for a clean higher high, and that is the system wrapped up.
The price hit his take profit instantly, and when it looked like it would go down, it came back and smashed right through it. A gold mine of unrealized profit. Although there are not many people who are as familiar with unrealized profits as TJR. He is once again trading NASDAQ, this time identifying no major liquidity draws or imbalances on the 4-hour, but when he switches to the 1-hour graph, things start to look clearer.
We have these hourly lows right here, these hourly lows right here, and then I also marked out these hourly lows because the market opened and then had this big abrupt move to the downside right after everything. So I didn't really expect that that was going to happen, but you know, can't really assume what the market's going to do on a daily basis. But anyways, we can see that right when market opens, we don't take out buy side liquidity, which is up here, and we don't take out buy side liquidity, which is right here. We end up coming down, we take out two forms of sell side liquidity, these hourly lows right here, and then also these hourly lows right here. From there, when we see those hourly lows get taken out, what am I going to be looking for? I'm going to be looking for a 5-minute retrace. We get this 5-minute retrace right here. We get a move up and then a move down, 5-minute retrace. From there, I scale down into the 1-minute time frame. Then what am I looking for? I'm looking for a break of structure and then a continuation confluence. We get a break of structure right here. We see a leg down. You're probably saying, oh, where's the continuation confluence? Just a plain and simple equilibrium getting hit. We see buy orders coming out of that with this candlestick, entered off that, stops underneath where the trade gets invalidated, which is underneath these lows because the trade was taken off of equilibrium. And then where did I go ahead and target? I targeted these highs right here for a 3.74 risk to reward ratio.
Essentially, he waited for a break of structure that could signal potential bullish momentum, and he entered at a place where buy orders were concentrated, or in his words, the equilibrium. And after placing the stop loss under the lows, he managed to come out with a crazy 3.74 risk to reward ratio. Alas, you can't have it all.
Price ended up coming up. We took out these hourly highs. I ended up taking out full profit. I definitely could have been much more opened if I had used my regular and more typical risk management to hold up to these hourly highs. I honestly would have liked to do that for a 1 to 6.58 risk to reward ratio. But because I was so heavily risk on and because I had already made so much freaking money once we got to these hourly highs, I was like, get me out of this trade.
The 3.74 risk to reward ratio is already great. Imagine having a 6.58 risk to reward ratio. Unfortunately, he wasn't willing to take on any more risk during the day. The same goes for Doyle, who was about to make the biggest trade of his career, only to be left dissatisfied with it.
This trade right here, this was a 5-minute liquidity grab / support setup. You can see right here we have a double bottom right here, and we also have the 200 EMA to back up the trade. So I also like to trade away from the 200 EMA. I like to go with the trend. So as I saw that it came back down to retest these wicks right here, I'm like, okay, this is actually a good spot where prices like to bounce off of. So price love to bounce off of moving average.
He spots a double bottom, which is a bullish signal or an indication of rising market prices. He also makes the general observation that price tends to bounce off of moving averages, which it is just about to hit. Of course, you can never trust indicators.
Yeah, so it came back to these wicks right there. It rejected it perfectly. I like this rejection. I sent this trade out to the Discord. We got in for buys right here. We put our stop loss underneath here. Okay, first take profit was up in here. The 1 hour also had a 1 hour demand as confluence on this trade too. So now we got 2 time frames going in one direction. We have the 1 hour that's creating a demand setup. We have the 5 minute that's creating a support / liquidity grab setup, and all the EMAs is underneath, and my stop loss just make perfect sense. Like I just love where my stop loss was at, right underneath the 200 EMA. That was literally perfect.
So he has liquidity sitting above that double top, which the price is likely to move to grab. A 1 hour demand zone reinforcing the setup and some sort of trend confirmation. Sounds great, but it's the end result that matters.
Yeah, so I ended up getting out right here around like 10:45, 10:50. I ended up getting out, and I'm so sick that I got out. I'm so sick that I got out right here because I missed out on all of this. Like I could have made even more money. Like that's the mind-blowing part about this. This was my biggest day and I left so much money on the table. This is just an extraordinary day. But yeah, so it reached my 1 and 2. I got out, and then the very next candle just pushed up. I didn't catch none of this. All of this is all I caught. I just caught that. And it's just like, okay, this is an amazing day.
He made the most money he has ever made in a single day of trading, but it's still a bittersweet moment. Trading in a nutshell.